All right, friends. Hope you guys are doing well. Mike Croft here, Money Coach Mike, or the Done by Lunch Investor. Anyways, what I'm going to do, guys, is I want to walk you through the Impact Mastermind strategy over 10 years. Okay, we're going to start with $1,000, and we're going to track every win-loss over 10 years, doing our setup, and what that grows to. So we're going to go back to 2025 as I'm recording this. We're going to go back to 2014. And run it to the end of 2024. Couple things. Number one, every trade includes all the money in the account. Okay, so as you start to grow this account over the years, that's me putting all the money back in. Not every trade was a win. Okay, I'm just going to say that right now. We did not win every time, but we use the setup to guide us in and guide us out each and every time. And then the third thing is we use cycles as well to kind of help us see into the future as to where we think the market's going. And in this exercise, I did not have cycles. So there's going to be a couple times you're going to hear me say, hey, I know what the cycles were doing at this point in the market, and this is why we didn't take the trade, or this is why we did take the trade. So there's going to be a bit of that as well. And I know that hindsight's 20/20 all the time, but what I'm going to do is I'm going to try and get as realistic to the trades that I took at the time, using the system that we have here and showing you where we can go. So this is probably going to go on for a while, me going through 10 years of data. I'm also going to use AI to calculate for me. That way I don't have to pull up my calculator to remember all previous year's datas. Okay, so a couple things you can do. One, you can watch the whole thing. All right, if you're like, you're really nerdy and geek out like I do, you can watch the whole thing. 2, at the bottom, I'm going to have chapters, and each chapter is going to be basically summarize the year. Okay, so if you want to go and see what we did per year, you can go check that. Or if you want to just see where we ended up at the very end here, you can click on that chapter down below as well. But here's what I know to be true is you're probably going to be super surprised how far $1,000 can grow and how big $1,000 can grow over just 10 years. You ready to dive in? Let's do it. Okay, so number one, let me go over to, let's see here. Okay, here's my AI prompt right here. Hey, I'm going to calculate every trade I made, or every trade, I made over the last 10 years. I started with $1,000. I'd like, the cool thing about AI is you don't have to spell properly, although I still like to do that, for you to keep track of my yearly gains, my win-loss rate, my yearly gains, and my win-loss rate for the year. Period. All right, so I'm going to give it the prompt, and I'd be happy to track your gains. Information, awesome. Okay, here we go. Let's start with 2014. Please also keep track of how many trades per year. Okay, just give me one more prompt. And here we go. It's ready to record my 2021 trade. So let's hop over to my trading view here. And here's here we use a Donchian channel, and here's a setup: candlestick above the green, green above the red, above the midline of the Donchian channel. If you don't know what that is, that's what we teach in the mastermind, so I won't do it now for the sake of time. And when we get above, we take the trade, and when we break down below, we get out. Some trades are winners, some trades are losers. Let's go 2014, okay? So let's see here. 2014 started right there. And again, depending on what the cycles show us, we would decide whether this is time to get in or not. To be honest, we didn't break the Donchian channel up to the upside. There's our all-time, there's our real resistance here. Let me just grab that there. There's our real resistance right there. And I do like to see, if we don't go down far enough, I do like to wait and see the Donchian channel break. And here we didn't. We were just going sideways, but here we did. So we'll call this our first move. And this might be a loser, to be honest. So let's get in here. We would have been out on this day, probably about there. And let's see here. Not a big gain, but not a bad gain. Okay, first trade was 0.84%. Okay, we're going to do that in there, and let's see what Claude does for us. I'm just looking at Claude to confirm. 14, okay, first trade 14 in progress. Okay, perfect. It's doing it. And then what we would do, guys, is we would be out for all this. We wouldn't sit in this. Right? In fact, we might take an inverse in this, but we wouldn't sit in this and hold. In fact, so we would have missed this fake out right here. We would have got in here or here, one of those 2 days right there, just depending on how we're feeling and what the cycles are showing us. But we crossed the midline, we're up to the upside. So let's just say we got in here on day 2. Okay, just pulling this over a bit here. Now, what's happening here? This is really interesting what's happening here. I don't know if you can see what I see here, but let me just point this out here. This is actually happening right now with one of our trades in 2025. We had a really nice swing up, and now we're doing this kind of arch. And the arch usually is an indication that we will be pulling down. And I think that's exactly what happened here. We did, right? So when I start to see that arch there, what I do is I set my brackets to start to sell me out. And I try and get them as close to I can to where we're going here. Let me just go back to this and pull you up. So we really would have been in about there and out probably this day, because we broke down, so probably about there we would have been out. So that was a 14.27% here. Next trade was 14.27%. All right, let's just make sure Claude records that properly. Okay, trade 2, awesome, perfect, it's got that. Right, and then we would, this is just chop and downwards. We probably wouldn't have touched this, especially if the cycles were showing us to like stay away from this or to stay out. We would have just held in cash for all of this. Probably would have held here too, because we're not breaking. Part of the great thing about the Donchian channel is you want to see it break, this top line break and move up. And when that doesn't happen, you just wait. And we're breaking more to the downside than we are to the upside. Okay, so here's where our next trade probably would have been. This would have been a short one, I think. But we would have gotten somewhere on this day or this day, one of those 2 days there. And we were out. Well, we didn't get out, actually. We didn't get out till probably about here is where we crossed over. We made 3.73%. So I'm just going to Claude or AI know that. Next trade. 3.37%. So yeah, not huge gains, but you're going to see here how over time these gains actually kick some butt. Like making 3-4% seems small, but when you start to make big money, it starts to look good. Okay, we would have been in on probably this day or this day. Okay, we crossed over. Everything looks really good, and probably would have held through this. We kind of crossed over, but we didn't break the midline of the Donchian, so we probably would have stayed in, or if we got out, we would have got in on this day. So we'll hold this one, and like I said, you can see the kind of curve starting to happen again here, and we were probably out, to be honest. We held above the midline still, so we probably would have held that, especially if the cycles were projecting upside. We probably would have held there. We may have crossed over. Even here, even though we crossed down, we didn't break. So, man, we're moving. This was a nice gainer for us. This is where we would have broken out for sure. We crossed below the midline Donchian, and then, yeah, we were crossing down there. So this would have been a holy cannoli, 78% gain. All right, so next trade, 78%. Sorry, I said 70. I meant 31. 31%. Whoa. All right, 31% green. Feed that into AI there. Let's just pull back a bit here. All right, and then we would have been out for this and probably back in over here. Right, this was a nice little run up as well. So let's measure this one. Probably would have been in on this day. It would have been this day or even this day right here. So I'm going to measure from that day there. That was probably more accurate. Came all the way up, and then we start to go sideways, and we probably would have been out on this day or this day for sure. We would have been out here, and so that would be another 12% gain. All right, and then we would have. I mean, we may have caught this one. Let's say we did. Again, if the cycles were showing downside, we wouldn't have. But let's just say we did for the sake. I don't have the cycles in front of me, but we would have been out by this day here. So we'll say it was a negative loss. You got to have some losses, right? 0.42%. Let's make sure AI catches that one. Okay, perfect. And then we would have missed all of this. That we would not have stayed in for any of that. And there's some seasonal patterns that do kind of give us caution September until about October. So that would have been a for sure stay out of. We would have been back in here or here, one of these 2 days. And we would have taken it probably to the crossovers, probably on this day, or this day. One of those 3 days we would have crossed over and gotten out, to be honest. And so that would have been another, what's that? 29.82-ish. Okay. Boom. Come down here to December, and then we would have probably grabbed onto that trade again. That looks like a Santa Claus, not quite, but almost a Santa Claus rally. Got out probably on this day. Very little gains. Very little gains. But that's okay. We're looking at 1.79%. 1.79%. Okay, and then came down. Wouldn't have taken that. Actually, this brings us into the new year. So let me tally up here. I'm going to share the screen. That is all for 2014. Please summarize the whole year. All right, starting with 1,000, ending with 2,299. That's a 129% gain. Okay, total trades 8, 7 wins, 1 loss, 87% win rate. Perfect. And then it goes through the individual trades, so we don't have to worry about that. I'm just going to say, awesome. Let's move on to 015. Okay, and again, now if you don't want to watch every single trade, just tap the tap below, and it will take you to each and every year going forward from here. Okay. All right, he's ready. But the Claude, the AI is ready for 2015. So let's hop in here. I wasn't sharing these tabs here. Okay, so there's our first trade, there's our first trade of 2015. There's our next trade. That was a really nice one, 2015. But you can see we go up and then we curve. Curves usually an indicator we're pulling back. There's our next trade. It was a small 1%. There's another small one and a little bit of a bigger one. Again, cycles would have confirmed if we would have been in, like they would have given us some more accurate in and out information, but we don't have that information going back many years anymore. We would have had it at the time, but it's all good. Ultimately, we probably would have waited for this day right here. And that's bringing us into May at this point. All right, so there we go. And it looks like we may have lost on this one. Not much, curve over, and we would have been out on this day, definitely by this day, which really gave us a 1 to 2% gain. All right, not much there. Sideways here, probably not doing much, to be honest. I mean, maybe we would have taken that. You know what? Let's do it. And if it's a loss, it's a loss. Again, cycles would have confirmed this, and we would have been out probably on this day. This would be probably a break even, to be honest. We would have opened here, continued to come down there, and got out. Yeah, we would have been out somewhere around there. So another, not even 0.5%. All right, we'll put that in there. Stay up for this, and this would have been a nice one for us to be in. Probably would have gotten on the second day. We usually don't get on the first day unless cycles are really strong. So probably would have gotten in there, and we would have been out realistically probably on this day, which was looks like about 10%. So that was a nice one. And then we would have been out through all this sideways chop and this big drop here. That wouldn't have been... something we would have participated in. More sideways chop, nothing here, nothing to get in here. Even though we are starting to make some highs, this might have been a spot to get in, but honestly, we weren't here until about here, which was October. Again, that September, August, July, August, September timeframe is really choppy and sideways. Not always great. Sometimes it is, but historically it's not. So this is definitely a time of caution when you're trading. But we would have got in possibly this day, but definitely if not this day for sure. So somewhere in between those 2 days we would have been in. And let me pull this down here. Looks like we would have gotten out probably on this day or this day, which would have been another 29%. I like that. It's now November, coming into the end of the year. Sometimes it's good, sometimes it's not. This would have been a trade we would have been in, and we probably would have been out on this day with a 2% gain, nothing big. Okay, and then we kind of went sideways. So I wouldn't touch this, honestly, unless we came down really hard or if we broke this level here. There's a strong level of resistance right here I can see. And for me to get in at this level, I'd want to break through or come down really hard and then start down here. So let me just delete that one. And so nothing happened. Stayed out, and that's where we ended the year. Oh, please summarize. All right, so check this out here. That's all for 2015. Please summarize. Yes, I spelled summarize wrong. I know. It's all good. AI knows what I'm trying to say. Okay, so 2015, year number 2, starting bounce 29.99, ending bounce 4,000. Even though most of the year were small trades, nothing huge, a couple nice ones, but I ended the year at 85% gains. Not too bad. Yeah, it's not 100, I know, but it's not bad. 85% gains, so 10 trades total. All were winners. A lot of them were small winners, nothing huge. You can see here, trade number 9 was my biggest at 29%. Trade 2 had 16, and trade 8 had 10% gain. Okay. Yeah, not too bad. And then there's a whole bunch of 1%ers, 0%ers, that type of thing. Thank you. Let's move on to 2016. Okay, again, if you don't want me to walk through the whole year, just at the very bottom, click the tab. I'll send you to the summary of 2026 and 2016, and you can see how we ended 2016. Okay. 15%? That's not bad. Okay. All right, so there's our first trade there. I just realized I wasn't sharing with you. So what I want to say was basically we would have been out just bidding cash for all of this. This trade here could have been a good inverse trade, and I do teach that in the Impact Mastermind, how to make money as the market comes down. But I'm not going to calculate that in my returns because I wouldn't have gone all in. I would have put a portion of my account in, not my whole account. Okay, so our next real trade was right there. All right, let me just zoom in here. Because we've come so far down from where that top zone was, this is a good spot to start getting in and taking it back up. And then from there, I would have done probably got in this day or this day, one of those 2 days, and probably would have held to about this day here where we gapped down and went below everything. That would have stopped me out, but that was a nice 11%. And then again, just held through all this pullback. Maybe put a small inverse trade, maybe played selling some puts or something, or selling some calls to make money while we come down. But the bulk of my money would have been out for all this. And then we would have been back in probably about here or here. And then out again there. So that was a small 6.38%. Okay. when you start to make bigger money, you don't need big gains to really have big impact. I'm at, let me see here. Current balance is at $5,806. We started with $1,000, like like 2.5 years, or less than, I guess, yeah, 2.5 years. We've 500%, or we've got up 500%, right? And you're gonna see how this has huge impact. So we would have been out for all this, out for all that. Probably would have been in here. And taking that up all the way to, look at that, we're coming back to that top zone. And I would have been very cautious of that because we hit it once, hit it twice, hit it 3 times, and knowing if we can't break through, and this is what I'm talking to the club about right now, we've got the same scenario where if we can't break through, we know we're going to pull back, and I probably would have been out on this day for sure. But still a nice 30% gain, or 31% gain. Like, come on. It's not bad at all. Gonna add that in there, and then look at that, we're starting to break through now, but we're going sideways. This probably would have been a loss because if I would have waited at this point to break through, we broke through right there. Well, you know what? Again, cycles would have to be showing we're having more upside for me to want to take that there, and I just don't have the cycles in front of me to show that or not. But let's just say we took it. It's going to be a loss for us because I would have been out there. That's a 3% loss. 3.2% to be exact. I'm going to put that in there. That wasn't fun. But again, what I would be doing at this point, because I don't like losing, even though I know I would be putting a line right there, in fact. And if we can't break that, I'm not in. So 2 things have to happen. The market, we have to break this line here, or we have to go down far enough that I feel comfortable taking an upside trade there. And we did do that here, and I'll show you where. So let me just pull that one out because that one's not in play anymore. So it looks like couldn't break through, came down, couldn't break through, came down. This may have been a trade. I know this is going to be a loser right here because we would have got out probably this day, which is a negative 1.91. Okay, hold on here. I'm just letting AI know. All right, so that's 2 losses. Ooh, that's not fun. But hopefully would have had the confidence to get in on one of these here. Coming all the way up, and we would have, again, we can't break it. So I know I know we attempted and couldn't get through. I would know this day would be time to get out with a little bit of profits, nothing huge. 3.3%. And then looks like we're setting up here to break through. And I probably would have taken one of these trades again to the top. It would have been a small one, is how I would have managed it. But that's okay. We did break through, so I'd stay in for this, and I'd probably be out here. Another 5%. And then by the time this trade happened, we broke through that, and this would be a strong one to be in. But this is 2017, so we're going to wait for that. We're going to summarize 2016. All right. Share this screen here. So that's all for 2015. Please summarize. Let's see what we did for 2016. All right, we didn't do 100%. We did about 84% that year as well. So we took 4,257, turned into 7,837. Total of 8 trades, 6 wins, 2 losses. Boom! Ouch, those losses hurt. And then I walked through my top performers and my largest losses. Okay. Always thank AI. 2017. Again, if you want to fast forward this, right below, click the little tab below, and this will take you to the summarization of 2017. Here, I realize I was talking a whole bunch of stuff, but I'm not sharing my screen. So I'm going to go back and quickly recap. This is our first trade of 2017. Did really well. Got out there. But then I was saying there's this top zone right here. You can see, if I pull it out, you can see top zone there. We tried to hit it there, and we couldn't break through, right? Those are what we call areas of resistance. And I don't like trading if two things have to happen for me to want to get in when we have an area of resistance. One, we've got to drop pretty far low, and then I can get it down here and take it back up. Or two, we have to break like we did right there. If we don't break, I usually just stay out and wait, because it can draw you in and you can lose money. Because look what happened. This little trade here came up and all the way back down. Now you could have held it, but at that point you're taking chances. You're not following the system, right? And we want to follow the system for guaranteed wins. Right, and then here's our next trade. We would have been out right. We got in right there. We would have been out right there. And we would have been back in shortly after, to be honest. Probably about right there. And then look at this big. Oh, that day would have hurt. If you missed that whole day, you were out at 8%. If you got, I probably would have been out around here, because I would have had an alert set by that point, which is really only a 6% move. Ugh. It's not crazy. Okay. Sideways chop, nothing to do here, just wait, and here we are right here starting to break again. And so we're getting in around there at some point. And then again, we're going sideways. This is an indication that's probably time to get out, or at least set a bracket that will sell you out if we go below a certain number, and that probably would have happened here or here, one of those 2 days. So we're up about 11-ish % for that one. Sideways chop, just wait. Again, we've got a level here that I can see right around there to there. Right, there's a level there. And two things for me to get in. We have to drop low enough that I feel confident getting in, knowing that we're probably going to have a reversal there. And so this trade would have worked. Would have been out on that day. Nothing much, 3.95%. Nothing huge, but enough to make some gains. And then look at the all-time high, or not all-time high, but that top again. We would have dropped, hit it here multiple times. Right, this zone right here, multiple times. And I'm waiting for us to break or drop down enough to get in, is what I'd be waiting for. And we did that. We dropped, and I probably would have got in here, knowing that we might have a reversal, and to set my stops really tight, but we broke through finally, and probably would have been out here or here, which would have only been a 5.65% gain. Man, these little gains, even though they're not much, they are mighty. All right, that's October. Let's zoom in a little bit more. I'm going to just pull out these lines down here. We don't need them anymore. We're breaking through. Next trade would have been here or here, one of those 2 days, and would have been out on that day. So another small gain. And on this day, and probably out on this day. Not a fun one. So make sure here Claude got that one. Okay, he got that. And then we had the confidence we would have been back in here and taken it ultimately into the new year. What I'm going to do is I'm going to stop this right there. That's probably where we would have gotten out. 3.35%. That was all for 2017. Please summarize. Okay, boom. Let's see what 2017 looks like. Awesome. Win rate. No, I'm not looking for my win rate. I want to know what my. Let's just take a quick look here. All right. Total for the gain for the year, 84.28%. Still not bad. I took 7,834, turns it into 14,437. Total trades 9, so that's not even one a month that we're doing, really. I won a lost one, is what I did. All right, so thank you. Let's move on to 2018. Woo, I spelled that really bad. There we go. All right. It's going to want me to calculate here. Now, 2018 was a new presidency. Trump was in charge, or came into power in 2018. And just so you know, again, hindsight's 2020. 2018 to 2023 was the best stock market we've ever had in the last 25 years, hands down. When you measure every 4-year period, 2018 to 23, even though volatile, was the best market we've had in over 25 years. Now, I didn't know that going into 2025 would be the best because we had some big up and downs, but it really didn't make for looking back, it made for a really nice 4-year period when Trump was in office. So let's see here. We would have been out there. We would have gotten in on this day or this day. Again, cycles would have confirmed this uptrend. So that would have given us some really big confidence, and we probably would have been out on this day, if not that day, by this day for sure. So somewhere around that 21-ish, 20-ish percent. So let's do this next trade, 21%. Let's make sure Claude has a calculator. 2018, trade 1, awesome, 28%. So that made us that trade alone made us $3,000. Wow, that was awesome. We would have been out, honestly, for all of this. We would have saw all that happening. Probably got in somewhere around here. Again, we don't usually get out on the first day. We usually get out on the second or the third. Sometimes we'll get out on the first if we're really confident, but usually it's the second day we get in here. And we would have been out probably on this day right there, which would have been a 12% return. See what I'm saying here? Like the moves are a lot more bigger in this one. So far, a lot more volatility, but a lot more money to be made when the moves go nicely here. And for some reason, my light just went off. There we go. Let's try that again. All right, here's our next one. Probably in on this day, and we would have been out for sure on 1, 2, or 3. One of these days right there, which would have been a 6% gain for us. And at this point, a 6% gain is making us like a couple $1,000s. So as we make more money here, the gains are making us a lot more money as well, even the small gains. And so here we go all the way down. We would have been out for this. Probably more of an inverse trading opportunity this would have been for us. But I'm not going to calculate that just because I don't want to. We didn't go full in on inverse. Next trade up probably would have been here, and we would have been out probably about there, which is a 5.83% gain. All right, missed this little bottom here, and this would have been our next move right here. So this day, probably not this day. If we missed that, we've been on this day. And honestly, probably would have been out here. Although, again, if the cycles were showing more upside, we probably would have held through that and taking it all the way up. If cycles are showing upside, we do tend to hold a little bit more than if they're showing downside. And we honestly would have been out probably on this day, to be honest. Even though we gapped down and went up, we probably would have been out on that day still. That would have stopped us out. So we did 18% on that one. Not bad at all. All right, again, held through the pullback and the chop, and here we are back in over here. And we were probably, I would say we're out on this day or this day, one of those 2 days, probably this day. $6.95%. Again, at 6.95% now, even though it's super small, that's a 2,000, no, that's a $1,800 win at 6%, right? So these little gains are starting to actually add up. And then here we go again. Probably would have been on this day, and this is going to be a loss. Oh, maybe not. We would have been out on one of those 2 days. Not a big gain, about a 1% gain. About 4% gain. All right. And then we would have been back in on this day here and out here. Again, this is more of a trading strategy, right? This is why we're not buying and holding. This is like we're in and then we're out, right? But the cool thing is we're making money. And we're making it work really nicely here. Kind of a lot of sideways chop. There's nothing to get into here, honestly. And again, we're at that top zone, right, where we hit this top and came down. And so until we break it, or if the market drops, that's what we're getting here. We're not going to get it on sideways chop. There's nothing to do here, right? Not for this strategy. There's some other strategies we teach you in the Impact Mastermind where you can make money on sideways. But for this, we're just waiting is what we're doing here. And so the market has a really big pullback going into October, huge, and there's just nothing to do here. Just wait. And that's probably one of the hardest parts, is just waiting, because you would have been sitting in this for a couple months. Now, again, could you have done an inverse ETF and made money as it came down? Absolutely, and this would have been a great one to do that with. Even if you missed that first one, like, to do that with would have been nice. You could have done really well, but we're not gonna calculate that. We're gonna skip all that, and ultimately that might be it. Oh no, there's probably one more trade to be taken here, and here we are right here, and probably honestly. I'm just realizing I'm taking that trade into the new year. So let me summarize. That's it for 2018. There we go, 2018. We started at 14,437. We're now at 29,787. Total trades, 8 wins, 8. So we had a 100% win rate that year. We made 106.33% that year. Like I said, even though it was more volatile, sometimes that makes better trading for us, because we get these big drops and then we get these nice gains up, and we can take advantage of that, right? That's just awesome. And like I said, Trump has had the best market. Now, I'm not saying it's because of Trump, but honestly, 2018 to 2020, end of 2021 to 2022 really gave us the best market in 25 years. We'll see what a second term does for us. But yeah, so it was great. Thank you. Let's move on with 2019. Okay. Again, if you don't want to watch me go through each trade, just hit our summary tab, and I'll take you straight to 2019, and you can see what we did in 2019. Okay. All right, let's dive in here. The first trade of 2019 would have been probably right here, to be honest. And possibly could have got out here, but again, if cycles were pointing more upside, we probably would have held through that and taken it to probably about there, to be honest. That's where we really start to pull back here. So that was a 37%, not bad, trade. Let's put that in here, 37.18 trade. That first trade would have made you, let's see here, $11,000. Boom. $11,000 right there. I like that. All right, and then we had our next trade probably right here. And if we're being honest, we probably would have got out right there. I do apologize. I have really bad allergies right now as I'm recording this. Okay. And then our next trade would have been here and probably would have been out here. So that was a 12% trade, and a 12% trade at this point with our capital is giving us 5,500. I mean, we're now making some good gains now, and we would have been out for all of this. Maybe took some inverse, but we would have been out for all that, and getting back in right about here, and taking it honestly till, let's see, probably here or here, this day or that day, probably this day. So let's just say right there, that's another 27% return. Not bad. That's bringing us into July. And then we got the sideways chop. The sideways chop. We could make some decent money in sideways chop, but not with this strategy. There's another strategy we teach you guys in the impact that would have made us money during the sideways chop. There's nothing to do here. It's just there's no direction. Maybe there's a little direction here, but I'm just not confident in any of this. I would have held July, August, September, and probably start to make a little trade here coming into October. Usually October is a good time frame. Man, 3 months. That's discipline to hold through all that and then take it up here. And our trade out or our exit out would have been right there. We dropped too far, too fast. I would have been stopped out. But that's still a nice 25%. Oh my goodness, 25%? Come on. I'll take a 25%er. All right. That brings us into December. That 25%er made me $15,000. Yes, please. That's awesome. And then we would have been in around here into December, and I don't know. Maybe we would have been, or maybe we would have held. But let me just exit us here, and then we'll start the next year. Okay. And so that was another 12.4%. That is all for 2019. All right, let's summarize. Let's see if it summarizes for us. All right, 2019, we started with 29,000. We turned it into 87. We did 6 trades, 0 losses, 192% win rate. Boom. Right? Some of these years do really good for us. Not every year is like that, as you've seen, but that was 192%. Thank you. Let's move on to 2020. All right, now 2020. Again, if you don't want to watch every single trade I take, just hit the summary tab below, and I'll take you to the end of 2020. Before I get there, I will say cycles were pointing to. In fact, you know what? I don't have them in front of me. You'll just have to trust me. I have the cycles going, but the 2020 cycles just got deleted last night, so I got to redo them. But in 2020, the big COVID pullback we had, the cycles were actually pointing to that really hard. And so we knew that was coming before it actually did. Now, we didn't know what the news was going to be. We didn't know that it was going to be COVID, but we knew the market was going to take a big dive. And it wasn't going to last long as well. That's another thing we knew, is that it wasn't going to last very long before it reversed. So going into February, we knew and saw that coming here. And so let me share this tab again, and I'll walk you through how we took that. So we got in here. That was our first trade. We would have been out here. That wasn't a fun one, fun gap. But let me just record that. 8.67%. Okay. Again, knowing that we're coming to this big pullback, we would have been in here and got out as soon as we saw things pull back, which would have been right there. That was about a 7% gain. And we would have, again, probably gone, we went inverse is what we did. We made money as it came down, but we saw the recovery was going to happen somewhere into March, April, and that's what happened. And so we really got in about here. And excuse me. Again, cycles were showing a lot of upside during this time. So we kind of just took it while we went sideways. We were out there. Holy cow, is that legit? 124%? I didn't realize that's how much it was. But the market dropped a good 40%, and the TTQQQ, which is what we trade, would have dropped about 70%. So there's a lot of gain to be made before we even got back up to all-time highs. And we got back up to all-time highs about there, which would have been July, but we would have been out somewhere around there. So that's 126%. Holy cannoli. So these big pullbacks sometimes are really good for us, especially if we're trading, because when we pull back this hard, we're going to gain it back. It's just a matter of time, and if you're okay being in, which we were, you gain back a lot of it. Okay? You gain back more than a lot of it. You more than doubled your money in that. Our next trade would have been in here, okay? And we would have been out probably about there, which would only have been 6%. And then we were back in, right about there. And we would have been out on this day, which is another 21%. Okay. Held to this big pullback. And I'll be honest, we would have taken some stuff here. It's summertime. We know July, August, September tends to be a sideways type of time. But probably there, and we would have been out there, which would have been nothing, 4%. Okay, and then again, probably back in about there, and we would have been out there, or one of these two. So let's call it that one, which would have been 6%. All right, and then waited for all this. Got in here, and we would have been out there, which was called a loss, -1%. Yeah, we don't go into losses too hard. Next trade, -1%. Yeah, because we don't want to stay negative, so we do get out. Just take the bite on those ones, and then we would have been back in right about there and out this day, most likely, which is about 9%. And then this trade would have been one right there, and honestly, probably out there, 6%. And that took us into 2021. It's all for 2020. Please summarize. On the screen. Let's see. All right, watch through each of the trades. Starting balance 87. We turned it to 370. Yes, we did. Because we made 325% that year. That's insane. That's unheard of. That's not normal. But again, a great year, a great pullback allows us to really make some good gains, especially when we're using a triple beta ETF or even options that that allow us to really get some big gains as the market moves. Okay, so 9 trade, we did 10 total, 9 wins, 1 loss. That's where we were. Thank you. Let's move on with. Sorry, even I can't handle some of the bad spelling or some of the. There we go. Let's move on with 2021. Let me just double check. 2020. Yep, 2021. Again, if you don't want to watch each trade, just hit the tab below, and I'll take you to the summary of 2021. Okay, let me just make sure I share this tab with you to show what we're doing again. There's our first trade. No, sorry, there's our first trade, there's our second trade, there's our third trade. Okay, nothing big yet, but here's where we would have got in, and probably at about here, or definitely by here, one of those two. Because we're making lower lows on these days, it's time to get out for sure. Okay, if you're still in, but that's a nice 15% trade. Not bad. Held, wait for all this to turn around, and we're probably starting to make some entries here. So here, oops, and potentially right here would have been a pullout because we gapped down pretty hard. So depending on where your alert was, this may have pulled you out. Yeah, we'll call that our pullout because I would have had an alert there that would have pulled us on a gap down. But we made 28%. Not too shabby. Okay. And again, nothing to do here, even though we got back into sync. I mean, could you have gotten it? Yes. But we never really broke through. We didn't even break through. Like, we broke through here, came down. We broke through here, came down. I want to see us break through, like, or come down far enough that we're able to get in. So potentially could have got in there or could have waited. But we would have been at about there. So nothing more than roughly about a 2% win. Nothing big there. But then here we're definitely going to take some. Probably there, and we're probably look at that 1, 2, 3, 4, 5. After like 3 or 4 days, like you get this curve, you can't break this. You start to come down. You're getting out, because it has to break through, or it's not going to work. So we're getting out on one of these days. Let's call it a 5% gain. All right, we're going into that September time frame where it just tends to be a little sloppy. To be honest, it usually doesn't get good again until about October. Not every year is like that, but a lot of the years are like that. And we would have been out right there. So 24% gain, and then we would have been back in right there or there, one of those 2 days. And back out. Well, this probably would have been a loss, to be honest. All right, nothing to do here. Just wait. The Santa Claus rally this year was nice. Got in, and we would have been out probably this day or this day for sure. So probably about a 4% gain. But remember, at this age and stage, a 4% gain is going to give you, with this amount of money, a 4% gain is going to give you, let's see here. No way. No way. Hold on. $29,000. What? That's insane. That's because the account's so high now. At this point, the account's almost $750,000. So going in with that much money, you don't need to have high gains to make a lot. So that's what happens when you get these big gains. All right, so we would have held through all this, and that's it for 2021. That's all for 2021. All right, let's go over here. All right. We would have started with 370. Turns into 770. That's 10 trades. 8 wins, 2 losses, 108%. That's why it's grown so much, is we were able to double that money that year. Okay. That's why that grew so much. Okay. Thank you. Okay. So 2022, let's talk about 2022. And again, if you want to summarize, want to watch me summarize, just hit the tab below and I'll take you to the summary of 2022. Cycles were showing a major pullback in 2022. Huge pullback we were expecting. We saw it before the year started and right at the beginning of the year confirmed. There were a few trades we took in 2022. There weren't many. 2022 would have been a great down year, like to an inverse trade year. And again, I'm not going to calculate the inverse trades that we're taking just because we don't go full in on inverse. We just put a little bit of money in. So it's not going to make the calculations great. Okay, so here's one trade we did right. This is one we took right here. And there's a couple reasons why we knew it was time to get out. One, we had a top zone from previous years right there. Two, the cycles were showing more downside. So this was a quick win, quick run. We knew it wasn't going to be much, but it was time to get out right here where we opened. And that was a 5%er. Okay, so next trade, 5%. And we honestly didn't trade again till the end of the year. Almost in September to October, we turned around, and the cycles were pointing to that. But our next trade, we did so little that year. We just held. The next trade was about 25%. And it was the hardest part of that year was sitting on your hands just waiting. There was nothing to do really until the end of the year. Or sorry, not until the end of the year, but we did two trades. One in February, one in March, and then we literally held our hands until October. So let me just enter that in. And again, this would have been a great inverse, get in, make money to the downside, all that stuff. And we really didn't get in again until October, because October confirmed for us. I mean, July could have been one. But October was confirming for us really the end of this pullback. And to be honest, we didn't do much in October either. We really waited till the next year. We only took 2 or 3 this year. Small one there we would have taken. But just a lot of sideways chop, double top zones. There's just not a lot going on here, right? And so the real next big trade didn't happen until 2023. So that was it. That's it. 2022. Yeah. Oh. We took $770,000 and turned it into $1 million. By 2022, so we started in 2014. By 2022, what's that, 8 years later? You were at $1 million using this strategy. That's it. There you go. Yeah, we don't do a lot of losses, and when we do losses, they're very small. We don't let our money accounts go down. We just want to take the big wins, the big gaps, and that's what we're doing here. That's why the wins are so big, is because you're really just taking these big gap downs and taking them up. Gap down again, we wait, take them up. And so we're just getting the upside of everything, not the downside, which a lot of people hold on to the downside, okay? All right, let me just summarize. Let me just say thank you. Let's move on with 2023. I'm probably going to stop at 2023, to be honest, because you kind of know where we're going from here. You know what we're doing. Into 2025, we've done awesome. We've had a big pullback in 2025. Just played the inverse, made it a little bit, about 13% to the downside, and now we're playing the upside as markets turn around. So we're doing the same thing we've always done. So let me finish. I'm going to do 2023, and then I'm going to finish the summary, and you can see for yourself. If you want to be in the club, reach out. This is what we do in the Impact Mastermind. You don't have to start with a lot, but you can see here very little can grow to a lot when you do it the way we're doing it. So we would have been in there. We would have been out there. That's 6%. And a couple things we know. So a couple things we understand is anytime you hit a bear market like 2022 and 2020 as well, we usually know, well, more 22 was more recession bear. we know that the 2 years after a bear market, the stock markets tend to rip and do really well. So we had that information on our side, and we also had the information as well that every year since, or every midterm election year since World War II, the markets have always done really well the year after the midterm election. So 2022, we had a midterm election. 2023 was the next year. So we knew two things. We had two big stats confirming that 2023 would be an amazing year for us. And so we ripped in 2023, we ripped in 2024. And then usually year 3 and 4 after a recession don't do as well. But we, because of the way we trade, can still do really well. Okay? So we kind of knew 2023 was going to rip. So we were a little bit more loose on our, like, where we got out, but we still followed the same pattern. We would have been in here and probably would have been out about there. Right. So next trade, 16%. This would have been probably a loser, would have got in there. Depending. If Cycle said don't get in, we would have waited, but we would have been out there for sure. That would have been a negative, call it negative 5%. I would have held through all this. Sideways chop. Not much to do here. There's our next trade, somewhere around here. And we would have been out probably about there, which is 11%. All right, moving on. It would have sucked getting out there because we had a nice little pop up there. And let's just say we did get back in somewhere around here or here. By the time we would have been out, would have been probably about there or there. Nothing much, just a 3% gain. In there and probably out there. Again, yeah, about 1%. And then back in probably here, here, or here, one of these 3 days. Or 4, maybe that day there for confirmation. But somewhere around here we would have been in, and we were out there, 7%. All right, and then probably back in here or here, one of those 2 days. And honestly, probably out on this day, because now we're working with a big chunk of change. We're working with a lot of money, so we're not willing to let the whole thing go down. So 7%. So we'll take these smaller gains, because the 7% hit at this point, yeah, it's insane. It's stupid on steroids. A 7% gain at this point is $100,000 gain. Like, it's just stupid on steroids, right? If you're following through every trade, putting all your money back in. And so we would have been in here and gotten out probably there or definitely here. That's another 5% gain. And I know I'm making it sound really easy. Again, hindsight's 2020. I've been through all this already. I know what worked, what didn't work. But if you just follow the setup, not every trade is going to be a winner, but you're going to do decently well. So we would have been in there, and I don't know if we would have gotten out here, to be honest. Yeah, we crossed down. Let's say we got out. That's only a 2% gain. Because now I don't want to lose anything, right? Like, you lose 1%, it's going to be like $50,000, right? So you're more cautious in there, and we would have been out here. But you're also setting brackets and stuff, so like it's automatically stopping you out, so you don't have to, you don't have to watch this every day, right? And you're looking at the cycles, and I'm coaching everyone every week. I'm showing where we're going and all of that there, right? So pull back into the summer here. Nothing to do here, because we usually get in the day after. Red day, if we miss that, what another big red day. So we probably would have been in here on this day, and potentially out on this day. If not, we were out on this day for sure, which is only a 1% gain. And then nothing to do here. Just wait, because look at that. We have a top zone. So we either got to drop hard or break the top, right? And so we dropped hard. And our next entry probably would have been here, one of these 2 days. Nice big pop-up day for us. One of those 2 days, and we were out either there, or if we weren't out there, we were out by there. You know, what's that, 1% gain? Like nothing. Put that in there. Would have missed all of this, and then got in for this. This was the biggest ride of the year. This was the biggest gain of the year right here. So would have got in this day or this day, probably that day. And just your classic, go up nicely, and then you start to roll over a little bit. So we would have probably started protecting our gains right about there, which is 22%. Let's see here. And then we're into December. Again, probably in one of those days there and out there. Call that a 10% gain. Next trade, 10%. And then we're into 2024 at that point. 2023, please. Some are rise. I'll share my screen with you. Boom. All right, starting bounce $1 million. End of the year, we're 2.4 million. That's 144%. Again, we knew 2023 was going to be great. Any year after recession usually is awesome. Even if you just buy and hold for the year, you're going to do well. So yeah, on 14 trades, we did 14 that year. We did 15, won 14, lost 1. And there we are. $1,000 has become a $2.4 million account. Wow. Now, keep in mind, this includes putting every single dollar back in every time we went in. You probably won't do that, but here's the point. We turned $1,000 into potentially, let's just say I'm half wrong, it's still $1 million, which is insane. And we did that between 2015 or 2014? I can't remember now. I'm just going to summarize here. I'm going to go back. 2021, 2020. Everyone watched the video. It's like, dude, you just told us at the beginning of the video. For me, it's been like an hour, so my brain's kind of like, So 2015, 2014. Okay, yeah. So 2014 to the end of 2023. 9 trading years, 1,000 into $1 million using this strategy. So if you like that, you got to come join us in the Impact Mastermind where we teach you how to do it. I go in and I share the trades I'm taking. I show you where to get in, where to take your profits so you're not losing. Walk you through each of that. Plus, we walk you through strategies on how to make money when the market's going down and when the market's going sideways. Yes, you can make money doing that as well. Okay, so if that interests you, hop on in or reach out, moneycoachmike.com/call, or just email me. You probably, if I'm sending you this video, it's because you probably already know me. And hop on there, book a call. Let's get you into the Impact Mastermind and get you making some serious gains. All right, we'll talk to you soon. Bye for now.